What's up, everybody? Michael Silva here to do some technical analysis on the S&P 500. We're going to look at the daily time frame and the 30-minute time frame. Let's get into it. If this is your first time here, welcome to my channel. I do these videos 5 days a week, Monday through Friday. If you've been here before, you're probably wondering, why the heck am I wearing a suit? Well, that's because I'm doing a special week's edition of the Weekly Scan. And that's going to be coming out today after this video. I'm going to be talking about specific stocks that I think are poised to move higher. With that said, I'm going to be keeping this video shorter today. No special patterns, no secret sauces. I'm just going to be talking about the technicals. So let's get into it right now. So right out of the gate, I noticed that there's been some really bearish price action. I thought with yesterday's move, we might see it move up a little bit higher, but that is exactly the opposite of what we saw. We saw a gap down and a move lower down to the $3,000 range. It almost touched it. It got to 3,004, which, I mean, let's be honest, that's pretty much testing that $3,000 range. So that is going to be offering up its support right there. Now we have the Fibonacci levels out just so you can see that, hey, the next level really would be that 50% retracement level at 2930, let's call it. We have the 50-day moving average here. We have the 3,000, nice big round number, and then we have it at the 200 period moving average. It just closed below it, offering up support. So there's going to be a lot of support in this range. We're going to call that the bull's camp. Let me draw in a rectangle so you can see what I'm talking about. So that rectangle right there is the bull's camp. It's going to offer up support right in this range, in this zone. And if it breaks below or down below this 2930 level, I do feel like the next stop would be that 2800, which we discussed on yesterday's episode. And then a close below that, yes, I do think the price can head lower, but I don't think that's going to do that just within 1 week's time. I think it would take some time to get down to that range, and there's just a lot of support here. So really, I feel like it can probably just bounce up into this range still. I just seeing that as the main option. So what really drove the market down today? I mean, I think it was a combination of a couple of things. We had news around the virus, and then we also had this stress test on the banks. That information was released yesterday, and the market kind of reacted to that as today. So where is the resistance on the daily time frame? Let me draw in a rectangle to see the bear's camp. So this red rectangle represents the bear's camp. It is a zone of resistance. This channel between it, this white space, is kind of what we've been saying is an area of increased volatility, and the channel that it seems to kind of ping pong and bounce around in. As you can see back here, it did the same thing as it's doing pretty much currently right now. So just keep an eye on either level right here, that 3,000 or the 3,150. If it breaks through the 3,150 level, I do think it's going to try to close the gap right here and then potentially move itself higher up into this range here, which is going to close the window from back here and then potentially test the market highs and move higher. And if it breaks down, like we said, it would have to first get through this bull's camp. This offers up a lot of support within this area, and then if it does break through that, the next level is that 2800 level, and then from that point it is lower. As I see it right now, the market is really putting to the test the buy the dip mentality. If you bought the dip down here, you're doing pretty good. If you bought the dip here, you're doing good. Here, 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 here. And now, right now, we're being put to the test. See, buying the dip here may have worked out a little bit if you sold some stocks, but now we are now going to be placed to the test again. Now, it's going to be very interesting to see how this plays out, because this is really the first time the market actually put in a lower high. It was really kind of higher high here, higher high here, higher high here, actually kind of just flat, higher high here, and then now it finally took a lower high. So this could say that the market is potentially moving down or turning around and changing, but I mean, we have to wait to see what plays out here. Right here can offer up a lot of support and a bounce into the next week. And if we look at the lows, you obviously have the low, you have a higher low, a higher low, a higher low, a higher low, and now a higher low here. So is it going to potentially create a lower low? And if it does start creating lower highs and then lower lows, that is a sign that the market sentiment is changing, that we might be seeing a stronger reversal taking place. It's going to take more time to see what actually happens in the market. So I have been waiting for this 3,000 range to make a trade. So let's go ahead and hop into the 30-minute time frame to see if it now is the time to make that trade. All right, so we're here at the 30-minute time frame. This blue vertical line right here, that is going to represent where the day began. So everything past this point has moved forward. Now, as you can see, pretty much right out of the gate, gap down, bearish, moved lower, bearish, moved sideways, and then broke down. That's somewhat of a bear flag, and then it broke down, further down. Now, typically on bear flags, the length of the pole is how far you can see that break down. And if that's the case, that means from about 30.72 down to 30.17, which is 60 points, let's call it, could potentially move from this 30.15 down 60 points. Now that's just a rule of thumb. That doesn't always mean necessarily that's going to take place. And as you can see, the market closed today and it's going to be open back up on Monday. So it's going to be interesting to see, obviously, where the market wants to open up the next day. Yesterday, we talked about this bear flag taking place right here. And then it broke out, which was very interesting because it is bearish, but it was in bullish context, so it bumped up and then ran down. This market is choppy. It's all over the place. So what can we do? Well, as of right this point, it has not hit my target of 3,000, so I have not made a trade. I'm going to be waiting for Monday to see where the market exactly opens to see whether I want to place the trade or not. And if I do, I'm going to be picking up shares within this range, and then I'm going to be going from that point to potentially that being the bounce point. I personally still am under the belief that the Fed is going to protect the market from a complete collapse. I think it will step in, use its tools that are necessary in order to do that. However, it doesn't change the fact that it's still not scary. So let's go ahead and map out the support and resistances here on this 30-minute time frame to get a good idea as what we can see take place on Monday. So right out of the gate, I'm just going to draw a line right here, the blue line at 3,000. That's going to offer up an area of support. Then the next area that I'm going to be keeping an eye on is this area of resistance at 30.40. Why is that an area of resistance? Well, simply because it back tested right here and acted as resistance, and it also held up here as support. It was kind of the bottom portion of this bull flag. So really the two areas that I'm going to be keeping an eye on is this 3,000 range and then this 30.40 range. Those are the short-term support and resistance areas to keep an eye on. Overall, you have the 50-period moving average really moving itself downwards. You have the 200-period moving average really turning itself down. You have a nice spread between the two, which is bearish. Okay, the more it spreads and the wider it spreads, the more bearish the momentum is to the downside, at least when the blue line, which is the 50-period moving average, is under the 200-period moving average, the pink line. The more major areas of resistance and support to keep an eye on, well, technically it is the 3,000 range all the way down to the bottom range of the bear's camp, which is 29.34 or 30, let's call it. That's the support. And then the upper range is the major area of resistance, that 30.50 that we need to keep an eye on. So as I see it right now, I am still waiting on the sidelines. I need to see it hit my price point before making any specific moves. That doesn't mean that I'm not going to be trading individual stocks next week. I do have some very interesting setups heading into next week, and I'm going to be posting those on the weekly scan special edition, as well as the normal weekly scan that's going to come out on Saturday. That's all I have for you. Have a good weekend.